Okay, so it's not every day. Typically the startup grind. How many of you guys? This is your first time at a startup grind event? Okay, so about half. Typically we have a founder or an entrepreneur, but sometimes we do get fortunate to have a panel of people, and this time we're really lucky to have two venture capitalists and one angel investor founder that can provide perspective on both sides of the coin. So we got Chirayu Wadke from SeedPlus, Jonathan Savoir from Quincus, and Leong from Openspace Ventures. So maybe what we can do is you can just give a brief intro so everyone knows kind of a little bit about what you guys do and kind of the perspective that you're coming from. Sure. And the hard questions will start. No, I'm just kidding.
Sure. Hi, I'm Jane. I'm an investment associate at Openspace Ventures. We're early stage VC. We have a total of 225 million of committed capital under management. In terms of our focus, we focus on Southeast Asia tech startups. We typically invest in Series A and sometimes also Series B stage. We like to lead investments. We're very high touch, hands-on investors, and hope to work with some of you in the future.
Hi, I'm Jonathan Savoir. I'm the CEO and co-founder of Quincus. As Curtis said, I'm here a little bit as a dual role. So one side is the investor, the other side is the entrepreneur. So in Quincus, we do supply chain end-to-end optimization, offices here in the UK and the US. And that's kind of my main focus, but before that I was investing quite a bit. So hopefully I'll be able to bring something to the table.
Oh, I'm sure you will. Chirayu?
Hey, I am Chirayu Wadke. I'm a partner at SeedPlus. We do seed stage investing. We have about $25 million under management. We've done about 13 companies at this point. Personally speaking, investing is a new area for me. Spent a lot of time in operating roles before this. And our philosophy has been that Southeast Asia and generally APAC outside of China is changing. More deep tech companies are being set up in this part of the world. So that was sort of the foundational idea when we thought about SeedPlus. That's hopefully we'll be able to talk a little bit about investing.
That's great. And I think we'll kick things off by just talking about, I've lived in Singapore for 13 years in total. The latest streak is the last 10 years, 11 years almost. And I remember when I came back here, I went to high school here, so when I came back here to work, I did work for a small company, a startup, and there wasn't really a startup ecosystem. There really wasn't a funding scene, like there is today. So I just want to get each of your perspectives as to how in the last 5 years you've seen the funding and startup ecosystem mature, not just in Singapore, but more broadly in Southeast Asia and the greater region.
Maybe I'll start?
Yeah.
So I think from my perspective, Southeast Asia is definitely moving in the right direction, and we've seen the landscape mature. I think if you go 5 years back, definitely not a lot of Series A capital, maybe some seed. But today, I don't see a lack of seed funding. I actually don't see a lack of A funding either. I think if you look at percentage of companies that get Series A funding from the proportion of seed-funded companies, it's actually in line with UK and the US. But I think what we'll see is continue to see increase in sort of later stage BC capital as well, which I'm really looking forward to.
Yeah.
So take a slightly different perspective on talk about venture capital in terms of percentage of GDP. And if you look at India, Southeast Asia, China, and then the US. The US and China kind of stabilized at, I don't know what the numbers are, but 2-3%, what the right number is supposed to be. I think India in 2016 just decided that they wanted to do 5% of GDP for whatever reason. You saw the valuations peak, and then it dropped. I think Southeast Asia is undercapitalized. If you look at the amount of percentage of GDP, there are many reasons why, and we can kind of think about it. But if you look at GDP per capita, it's pretty high. So compared to an India, for example. So the question becomes, why is the percentage of GDP, venture capital as a percentage of GDP lower? In terms of stage as well, when I first landed up, seed stage was kind of unique in that sense. But we're seeing that angel rounds are kind of eating into the lower part of seed, and the classic seed rounds have increased in size. The seed rounds, the classic seed rounds, then get into the pre-A, which is like $1.52 million rounds. So we're seeing some of these trends where we see that the round sizes are getting pushed up. But at the end of the day, I think it's about companies being formed and creating product market fit. It doesn't matter, at what price you get in. If they're great entrepreneurs, they'll figure out a way to make it work. So
Right.
that's sort of broad trends.
You were saying the angel investors were encroaching a little bit on some of the seed rounds. So, Jonathan, you were an angel investor.
Yeah, I mean, I think that's true. Certainly the angel investors were co-investing with pretty sizable seed rounds, and that's still happening today. I mean, I know quite a few angel investors that are still investing with seed funds and doing that happily so, and continuously keep doing that. But then also I think over the past 5 years, what's interesting is that it seems that the ecosystem has become a lot more sophisticated as well. So I think if you look kind of at the funding of early on companies, it was a lot of B2C, and that seems to have been the focus. But now, I mean, as an enterprise company and as a B2B company, you see a lot more funding in that direction as well. So you see a lot more maturity across the board in a lot more companies, and regardless of which sector, regardless of what they're targeting, whether it's consumers or businesses, which is good. That's a strong indicator. So.
And I think to add to Jonathan's point, another sign that the market is maturing is that we're starting to see more specialized funds, right, in the seed and A stage. And we're also seeing sort of an influx of corporate VC money as well, which is also a sign that the market is maturing.
Yeah, it's kind of, you go from that kind of generalized sort of fund and then into very specific areas, and then the companies, and even some of the more private family offices as well, also getting on board that as well is pretty interesting. Jonathan, I want to talk to you about, because you guys did some funding.
Yeah.
Where did you, maybe tell us a little bit about that process, where you raised and what that was like and how you've seen it change in that time period since you raised.
Sure. So because we're a UK, Singapore, US based company, our funding is a little bit interesting and probably pretty unique in that sense. So we are funded from the seed stage pretty early on from a global investor. So we have investors out here, we have investors in the UK and in the US. But that's pretty rare. That's really not the route to go. But
Make a mental note of that.
Yeah, do not do it. just don't do it. But I think in that sense, also from an investor point of view, I think it seems like investors are a lot more also capable of investing anywhere in the world. So you see, I'm right now talking to investors out in the US that are very comfortable investing in Southeast Asia. And
which wasn't always the case.
Right.
Yeah.
So 5 years ago, this was definitely not the case. They would be like, wait, what? Why are we investing in Southeast Asia? And now you see a lot of US funds and UK and European funds looking at the region, which also points towards maturity and understanding of the market and creating that understanding. And then from companies' perspective, it's good because you get that relationship with both markets and be able to create that relationship. So.
Yeah. And Chirayu, you said that in your opening remarks that you think Southeast Asia is undercapitalized. So what are some of the things that need to change to kind of right the ship on that and for the funding to kind of be more in line where the demand is in the market?
It's hard to say where the gap is, but there has been an observed gap publicly around B, C, later stage C, definitely, and there are some specific funds that have come up to close on that gap. So what lands up happening is a lot of companies raise their B round from VC funds, and it's not easy. And after B, you suddenly have the Warburgs and the Goldmans and the TPGs, right? That's not classically the case in most markets. What happens is there's a transition to later stage VCs who get CDC companies, right? You're talking about scale stage companies. And then at D, it's understandable if you start looking at 30, 40, $50 million rounds from the ones I spoke to you about. But there's obviously that gap. And, it's a natural progression. Lots of funds, including when Openspace started and some of the other funds started, they started small and they grew.
Yeah.
So the ecosystem is in that phase where you will find funds that are started to cover that gap because there'll be opportunities that would have become mature by then for those funds to take advantage of. Companies that are 30, 40, 50 million today, but will be 200 million and ready for possibly someone at Series C. So that's one gap. I think there's still, even from a seed stage, more needs to be done. I think there are sectors that are broadly sort of not covered, but it's hard to sort of point out if there are specific areas beyond these that come to mind. But definitely the Series BC gap is sometimes being felt.
Yeah, and we're also seeing the rounds getting larger and larger for local companies. Like, Caro, I think, was about 60 million in their Series B, and we spoke to Aaron at Startup Ground a couple of months ago. So the fundraising amounts are going up, the rounds are getting larger for companies. What advice would you give to startups in terms of trying to navigate that kind of whole, you talk about gaps being filled, the angel investors, the different funds. What advice would you give for somebody just trying to start out and navigating that fundraising space if they're a startup?
I mean, in terms of how much capital to raise?
Yeah, or capital, or just where to go at first.
I think it depends on the stage you're in, right? So for instance, if you're raising Series A capital, typically you already have that initial product market fit, right? So you should be able to make sort of a educated and a model, right, based on your current experience, and you should be able to have a quite good estimate of how much capital you would need to get you to that next stage. And I think for us as investors as well, when we do invest in your Series A, we also work very, very closely with you to understand, okay, after Series A, at what shape and in what position do you have to be at when you raise that B capital, right? And even at the Series A stage, we already start helping you think about who would this Series B investor be, right? To help you figure out that path, your funding path, right? And having all those different options open.
Yeah. And are you guys seeing more startups getting smarter about the amounts that they're asking for? That's part of the maturation of the ecosystem, is that the pitches are stronger. Are you seeing that trend continue with startups?
Yeah, and I think for us as a fund, our ticket sizes for our Series A has also increased, aligned with the market, but we've also been much more, I guess, pickier, so the percent of companies that we see that get funded. So I think this is definitely a very, very good sign, right? So the right companies do get funded, and they get the ticket size that they need to get to that next level.
Just observation on that has been that I think the market is still to come around understanding that once the VC is a different asset class, that once you raise money from a venture capitalist, the likelihood that you need to keep raising money is higher. I think that sort of understanding is still getting there in terms of maturity, because a lot of companies think they can raise a round and then just, and that's it. And that's okay if you're going to turn profitable and you're growing crazy and your own cash flows are suffice. But more often than not, your cash flow requirements land up not being suffice. And then you get into the situation where the VCs expect a certain time horizon for getting to the next stage, and that's just because the VC asset class behaves that way. It's not that it's something that the investors want to do necessarily, but that's what the returns expectations are from limited partners who put money in these asset classes. So I think that maturity or that binary tree starts at saying, does this business need venture capital or not? And I think that fundamental understanding is still getting there, and it's getting there even globally. I think that's a problem, but in Asia, that's still not there. People, if you look at the cohort of companies that very early that want to raise money, you will come across a larger percentage of companies who actually are SMBs, who will probably never get to that size wanting to raise venture capital, and you're going to land up actually this is not going to end well, because you're going to get under serious pressure of growth, and you want to get a P&L. So it's a completely different business, right? And it's never one against the other, but the early stage venture is one against the other. You can't go build a P&L business on venture capital money. I mean, that's too much of equity being given. That's very expensive financing. And I think that mental model needs to change. I don't think people have understood that yet, that giving 10% of your company for $1 million is a lot to give. There are better sources, cheaper sources of financing. And to give up this percentage of a company is only if you believe this is a long game and you're going to build a massive story. So
Build a big company, the big
yeah,
brand.
yeah. I mean, that's sort of in my mind the fundamental question that I don't think gets answered.
Yeah, good advice, Jonathan.
Yeah, that's
Sorry,
probably
shaking your head.
no. I mean, no. I'm nodding actually.
Yeah, nodding your head. Sorry, nodding, not shaking. Sorry.
Yeah, I probably agree with that. I mean, I see, fellow entrepreneurs like very much angling of, and I'm gonna work against you guys for a second here, but a VC being the funding to go, and I'd say that's not necessarily true. It really needs to fit your requirements. So, for instance, we're private equity and family office funded. We don't actually have a formal VC on board, and intentionally, we're an enterprise company. Like our business is P&L run, and because all of our contracts are blown out of water by any other P&L, right? So it's a lot of it is private equity funded, and they understand that model. Venture capitalists would just put pressure on timelines that you just can't push on the sales cycles, for instance, that take really long in enterprise. So there is that balance between you really need to understand who you're taking funding from and whether that is the right investor. So don't always go to VCs. And even though that seems the goal to be, don't always go to them.
Yeah, there's a rush to they
Right.
see a money pit and it's like, we need to get VC funding. And
Right.
it's like, well, that actually might, think about it. That might actually not be the best course of action.
Right.
Moving on, what sectors or industries within Asia in the startup space are really exciting to you guys right now? Like where are you very bullish on some of the companies coming out of this region for funding opportunities?
I think for me personally, I have 3 areas that I spend more time on right now. So first of all, our firm invests in all sectors, all tech sectors, B2B, B2C, but personally, I've been spending a little bit more time on the B2C side. So I continue to be very bullish on the e-commerce side. I know many people say it's a 2015 thing, but actually if you look at the numbers and the growth, it's going to be an 88 billion industry in 2 years, right? I think second, in terms of machine learning, big data, right? I think that's an area that I'm very excited about. I think overall that's going to drive more efficiency across different sectors. And lastly as well, I think as the market matures, we will continue to see a more sort of higher value services, higher ticket size, as the consumer sort of gains more trust, right, in the internet economy. So I think we're going to continue to see more and more opportunities in the health tech and ed tech area. And I think Southeast Asia as a region, there are a lot of pocket of opportunities, a lot of limitation in infrastructure where these new players can disrupt and create new services as compared to more traditional players in infrastructure.
Anything to add? What was that? Oh, there it goes.
So I think we look at the world more from 3 sort of themes, and then more, but just wanted to sort of take a step back and say, broadly, there's consumer, which is consumer in Southeast Asia. That's one area. The other area kind of would be a derivative of that, would be infrastructure to make sure that e-commerce or, say, a transportation app can run. So payments infrastructure, logistics infrastructure. Right? So that's all sort of there. And you got very specific about it. It's B2B enabled for SMBs, because there's digital transformation happening across Asia. There's sort of this generational shift happening where previous generations handing over some of these companies to the next one, and they're more open to change. Smartphones are everywhere, so use cases that were not possible maybe 6-7 years ago are now possible. So that's another broad bucket. And the third one really is enterprise, and we're very specific. Enterprise companies that are being built out of here have to look at the US. It's almost the Israel model in some sense, because the enterprises in Asia don't buy from startups, they buy from brands. It's very clear, like all the data shows us that. So there's no point fighting it. So our belief is build global stories. And if it's a global story, don't spend time trying to build your product on enterprises out here because their needs are very different from, say, something like a US or Europe. So enterprise companies being created here. If you're building deep tech, Singapore is literally 80% of all of Southeast Asia in terms of buying advanced enterprise technology. So you're wasting your time trying to build a company of that nature here. The market's not large enough. So we're sort of taking a pragmatic view on those things. So those are sort of 3-4 areas broadly in terms of themes. And then, obviously you have verticals, but kind of don't want to make it more complex.
Yeah. No, it's good feedback. And I saw Jonathan nodding his head again because you guys service enterprise clients, when you're making the point about enterprise level out here.
I mean, to give you an idea, I spend probably 60% of my time on flights between here and Europe and the US. So yes, I definitely agree with that. I mean, a lot of our clients have their headquarters are either in Europe or in the States, but then they have an APAC headquarter here. So we service a lot of APAC, but it's a lot of still flying around, and a lot of the decision making still happens in the States. So you got to be there if you want to make a change. Having said that, though, I mean, we have a lot of e-commerces and showing interest, and that's very much on the B2C driven growth, and you see them doubling every year, which is pretty astonishing. In places like Indonesia, Vietnam, Thailand, Malaysia, it is like having double growth or doubling growth every single year in the region is impressive. I mean, if you look at the market penetration of Indonesia for B2C, it's still really low, and the opportunities are vast, right? So I think there is definitely both sides of the story. B2C, there's a lot of opportunity. Enterprise, there's a lot of opportunity. But yeah, for enterprise, it is slightly different story on how to build a company. And then you have some specialized funds like SeedPlus that do enterprise funding, but you're far and few between though, I think. And
I think our thinking has changed over time. I think we started out thinking we'd do enterprise, but what we've realized is that a license fee SaaS model is hard to make work in this part of the world. It does work in very specific situations, but the moment you go license fee SaaS point of entry, you will see that your decision making of the buyer goes up significantly. So what we've seen work is you give the software for free, and then you kind of have stuff inside the software that you charge for. So we've seen commerce models, we've seen spend models. So kind of learning from some of our past investments that have given us some vantage point on that one.
Any sectors or startups in a certain space that you think that's going to get overheated and too saturated, where there's just too many companies being started? And you guys are smiling, so you probably have something to say on that.
Crypto?
yeah.
Yes.
Who's in crypto out here? Anybody in the audience in crypto? Nobody. Okay. Well, you're clear.
Gotta say though, it's interesting. I think we're seeing kind of the overheating dying down though, which is I think a good sign.
Which is good, yeah.
Yeah, and I think it's also a matter of now people are actually looking for real applications, large companies, enterprises, and small startups alike, and actually just looking beyond, let's put everything on the blockchain kind of thing. So they're actually looking at what differentiates the technology and where can we make it applicable. Still hard to find, but it is becoming more of that. So yeah, we're heading the right direction, I think.
Great. We're going to open it up to Q&A in a bit, but I just wanted to get your perspective since T Hero and Brinc are partnering with us on this China competition. Just want to get your thoughts on the Chinese startup ecosystem. And that includes not just the startups from China, but also the market and the funding space out there, because you've seen a lot of maturation in the Chinese market as well. So just curious to get your perspective on what you see shaping up in that market.
So I think for China, so we don't invest in China, but overall themes that we've seen, I guess early 2000 to 2010 was very much internet e-commerce, and then 2010 to now it's very much been, mobile, right? A lot of successful companies have come out of China, and their natural extension has sort of been to Southeast Asia, which we definitely benefit from. So from a Southeast Asia perspective, we have seen a lot of deep pocket investors and strategic companies coming to the region to either strategically invest or also do partnerships, right? Because I think from the lesson we've learned from China is that they've really been able to fend off international competition, right? So I think when they look at Southeast Asia, they're also more inclined to partner with local players or acquire local players instead of going in on their own.
Yeah, very good points. Anything to add about China?
So I think just from data, right, what we're observing is that Southeast Asian consumer is moving in a different direction than the consumer in China. So if you look at the end point of where this would go, a Southeast Asian consumer or an Indian consumer for that matter, this whole sort of segment looks more like an American consumer than a Chinese consumer. And whether it's the habits that have been created as a lack of competition on mobile, or whether this model of having everything like a hero app that WeChat became, that sort of concept is not percolated in other parts of Southeast Asia. And even if you look at social media consumption or commerce consumption, the trends point squarely, if you sort of draw the line, to the US more than China. So that begets the question, if the trends are moving in that direction, what does that mean? And some of the strategies that were successful in China as a result of sort of a semi-closed ecosystem may or may not work in other parts of the world. And I think, but one thing that we kind of saw specifically, since I do some hardware investing myself, on the hardware side was, and this is true of Brinc because I know they have sort of a lean towards that direction, they have figured out the services model better than anybody else. So how to sort of make the hardware cost low and sort of sell services as a subscription on top has been mastered. So I think there's something to learn out of that for the rest of the world, because that model works. It works, it scales. I think a lot of people outside do hardware just the other way, where they want to throw millions and millions of devices out there for a fee and hope that once millions of devices get out there, I turn on business model number 2, which is, by the way, a data or a services play on top. But it doesn't work. It hasn't worked outside of the big companies who have the money to actually wait it out. So a few things to learn from China, but also mindful that consumers here are differently minded and they're going in a different direction.
Very interesting insights. Jonathan, anything to add? Or
Not that much, I think.
you guys don't do much in China?
No, so I agree with Jane on, I think China is an interesting market. So as a company, as a company that's growing, everyone, you look at obviously the region and you look at, okay, we should be in China, but it's just really hard. It is hard to, even as a Singapore-based company, it is hard to look at it and say, I'm going to go and enter without $1 billion in your bank account, because you basically have to tackle a really large market. And that's kind of what I think scares a lot of people off. So there's a mindfulness of you need to partner up with the right people, the right partners, the right customers, go in with from the get-go with customers, and then you can probably scale out there. But there is, it's definitely a different market in that sense. So something we're looking at, but for the future.
Yeah, very good insights. So we're going to open up the floor to questions, because I know there's probably going to be quite a bit of questions, because it's not every day we get people from the VC scene to come. So anybody got a question? Right there.
Hi, I'm Blake from Janius. Can you tell me what your thoughts are on HR tech?
HR tech.
So we have a theme called the future of work. So we kind of classify HR tech as sort of future of work. So there are a bunch of things in that, and we think that the market's underpenetrated, at least as far as different kinds of HR technologies are concerned, outside of payroll and some of the more basic stuff that's compliance driven. So we're seeing more discretionary softwares taking off. So we invested in a company called Engage Rocket that's looking at more sort of customer feedback, employee feedback as sort of a measure of how well employees are doing. So we we think that, and then we've invested in other AI scheduling companies. So we think that the market's going to move towards more towards automation, and HR tech sort of is an intersection of sort of automation and workplace with the future of work. So we've seen a lot of companies trying to schedule for blue-collar workforce. We've seen blue-collar workforce communication rules, blue-collar workforce training tools using NLP. So we've seen a bunch of companies. So I think technology is enabling companies to create propositions that can be delivered at a very low cost to a lot of audience. So I think fundamentally that leads to them trying to solve for massive swaths of blue-collar workforce. So just from a mental model perspective, we're seeing a lot of that emerge.
So from my perspective, there are many areas of HR tech, but the companies I've come across lately have all been focused on sort of the hiring side. I think for me, one of the themes that I look for, maybe more focus on sort of blue-collar workers or jobs that have higher turnover, where there's actually a need to use something like an app, right, or a tech solution. But what we sort of seen lacking as well is for the app to create stickiness, because many of these apps are open ones. The job seeker try it and then they never open it again. So how do you create that stickiness, right? Whether that's with reviews or sort of a social element to it, I think, yeah, there's going to be an opportunity there, and we'll be very interested to meet a company that does that.
Hi, Jane. You made a comment about the BAT companies coming out of China interested in Southeast Asia. Would you have any advice for an early stage startup who's got some tech that they might be interested in, but obviously cautious about opening the kimono to them too early, given that they're raising such big rounds?
Yeah, so for the Baidu's, Tencent, Alibaba companies investing in the region, we've seen a lot of activity. But as we tell our entrepreneurs, be very, very careful when you speak to Chinese strategics, right? Because there is sort of a risk that your technology will be copied. Right? So always approach that very carefully, and you want to make sure you're at the right stage before you engage in those conversations. And I think having the right early stage investors would help you a lot in terms of that. Because, for instance, for us, we have the connections to most of the large companies in China, right, the tech companies. So we usually do road trips and road shows together with our entrepreneurs to meet these strategic companies.
Yeah, so I think to add to that is make sure you're at the right stage. Make sure not just on a funding perspective, but also on a technology perspective. Make sure it's matured enough, that your team has matured enough. And that, if it's core technology, if it's make sure you have the core insights down, so that you don't have to open the kimono fully, that you can maintain your core insights. Try and maintain that.
I think you definitely have to be at a stage where it makes sense for the strategic company to, say, acquire you or invest in you, right? Is it going to take them 2-3 years to develop what you have developed? If yes, yeah, then it may make sense for them to invest in you or have a partnership with you.
Great. We had a question over here.
I have a loud voice, so I'll just... Hello, Cindy from Reddit. Can I get your thoughts on regulatory technology?
I guess that would be reg tech. If we're signing like short names to it, reg tech.
Regulatory technology sort of themes I've seen has mainly been focused on, for instance, helping lawyers on the due diligence process, right? So if they have a very good OCR, they can sort of automate, like picking out keywords to help lawyers prioritize work. It's also been about sort of searching, automatically searching for patents, right? Knowing sort of what's out there. Those are the two themes that I've seen, or the companies that I've come across in most cases. And I guess for the OCR part, right? It's difficult, I would say, for us to invest in that type of technology right now because there are already a few leading players. So if it is in that space, we would definitely look at the competitors and sort of how, yeah, you're different and would be able to compete, especially in a Southeast Asia perspective.
The patent space is really interesting because, patent attorneys and the length of time to get a patent is really quite long. So if you can build efficiencies into something like that, that's always going to be of interest, I think. You want to add to that?
I think that's the single most amazing thing that can happen because compliance is a big driver of digitization in this part of the world. The moment I hear compliance, I hear customers ready to spend on software that helps them get to compliance. So if I were to answer your question, regulatory technology or regulations leading to adoption of technology is amazing. What we've learned is a lot of customers who buy technology for meeting certain regulatory guidelines can't take a bet on a technology very easily because there's a very high risk and high fines, very large fines. So what we've learned to do is sort of tie up with companies that can, classic sort of big four that say this technology is compliant to regulations or will help you comply with regulations, and we've kind of audited the technology, so that helps. So we've done a few of these things that help our companies kind of become part of the mainstay, but yeah, that's a single big driver of adoption of digitization in this part of the world. Even payroll compliance, like as simple as that. You will find out people are spending tons of money just to be compliant with payroll. So, it's been around for a while. Now it's kind of taken a funky term called RegTech. But.
Other questions? We'll go here, and here.
Hey, Dolita from Alakazam. I have a small question regarding Southeast Asian market for like MarTech, for like marketing technology for small businesses. So what do you think is the opportunity there? Because if e-commerce is growing, then there should be a growth for SaaS type of maybe free models for like marketing technology for SMBs.
Yeah, for sure. I think as e-commerce is blooming, marketing technology will also bloom. But I think what we've seen in the market is that it's very, very fragmented. So there are a lot of sort of SME types agencies as well. But we do see a lot of startups coming up as well, especially on the influencer marketing space. So solving different parts of the problem, right? Whether it's discovery of influencer, content creation, or being able to quantify the return on influencer marketing, right? So that's a space that I'm spending a bit more time on and looking into right now. It would be exciting to see if that can take share of your typical Facebook, Instagram, Google ads.
It's certainly an interesting market. I think the interesting perspective that you need to have is that Southeast Asia is not one market. It is a market with basically 5 markets, 5 different cultures, 5 different languages, and if not more than that. But that's kind of the trend, and that's why it's hard for any single one application, whether it's SaaS or anything else, to really take off. That's how I would think about that sense.
I think the biggest challenge you'll have is reaching out to an SMB audience. How do you get that done? Because the online marketing funnel is so crowded today, and prices to reach the SMBs have gone up dramatically, and the acceleration of those costs of marketing have not kept up with the budgets that the SMEs have to spend on your product. So the question is, what's your, as they call it, the cost of customer acquisition to the lifetime value of the customer, and where does that fit in? And is your product large enough to actually make economic sense? And I don't know what that is. Without knowing your product, it's hard to say. But if you're going to charge a SaaS fee, that's going to create friction right away. So something to think about.
Don't even get me started on influencer marketing. we could have a whole nother session on that with another speaker. Here, right? Okay.
So if you had a startup approaching you for Series A funding, which roles would be absolutely necessary to be in-house? So apart from a CEO, COO, which other roles must be in-house?
For us, of course, strong founders, right? Core team. Whether that's you call yourself a CEO, COO, or CTO, I think less important. I think what's important is that you have founders that complement each other and that you have a strong sort of founder product market fit, right? So actually to complement you, we have a very strong in-house ops team. So that includes an in-house CTO, in-house HR expert, in-house legal, in-house performance marketer. So their job is really to spend time with you, our portfolio companies, to help them in these specific areas while they haven't built that internal expertise yet. So definitely there's no one specific role like a CTO. You have to have a CTO in order for us to invest in. No. You have to be a strong founder, of course, and yeah, be very confident and know the things that you're good at.
I think for us, it's the technology team has to be in-house. It's as simple as that. Because if you're outsourcing the technology team, it depends also what you're outsourcing. If you're doing the skinning, which is front end and outside, that's okay. But if the core tech doesn't reside within the company, the challenge becomes the velocity of iteration, because you're going to throw out multiple versions of the product. And if you have that outside of the organization, the question becomes how quickly can you react to changes in the market. So also the control over the IP. But that's less of a problem. Most of the vendors are okay with that. The question becomes just velocity of how quickly you can put products out in the market. That becomes a challenge. So not having the tech team sort of reside internally is definitely a concern.
Hi, Thiago here. Although the market is growing quite fast here, the startup ecosystem is growing quite fast in the region. We don't see yet that many exits. I would like to hear your thoughts on why is that, and where do you see it going?
So I don't think we can talk about exits in isolation. I think it's always a comparison. I'd not like to tackle this from a US perspective, because US is a very unique market, and I don't think we see the kind of exit liquidity that you see in the US anywhere else. But having said that, my perspective on exits is, I think Southeast Asia is a talent deficit market. And what that does to the market is, if you build a company that's across 6 different countries, you kind of wipe away most of the talent in the market for that vertical, because they're all working for you. And for someone to come in from the outside and create a competitor is generally harder. So what we've seen is, because of that complexity, companies that come from the outside prefer to just buy companies. Who's going to deal with 6 countries and trying to build a talent team when none exists? Compare that to a straight up comparison is India, where you had every single unicorn, US had a US counterpart, right? So that's because the talent pool is very deep. So you can literally recreate within a short span of time, if you have enough money, the same kind of competitor. China kind of artificially stifles that, if I may. I can say that now that I'm not in China. But it stifles competition in many ways, right? So it's hard to build a competitor. But here it's more a function of not just not having enough people, engineers or product people, to build a like-size company. So most buyers will want to buy. So to answer your question, the potential exists to buy. The question is, are these companies large enough to become attractive to some of these brands? And we're not there yet, but I think we'll get there. But from a exit liquidity standpoint, if you look at it, the exits are more frequent than most other regions, but they are smaller in size. So you don't see the massive exits, you see sort of $30 to $50 million ranges.
Yeah, I think liquidity options are definitely opening up. Overall, we see 3 categories. Number 1, your Western companies coming in, right, where there's European or US giants, like your Sephora's acquisition of Luxola in our early days. Or these Chinese companies coming in, right, who want to extend and sort of strengthen their foothold in Southeast Asia. So whether it's your Tencent or your Alibaba. But a third category, we think I've seen local domestic companies that have become big in size also consolidating their stance, right, in the region, so like your Gojek. And in terms of IPOs, definitely still early days, though we saw some encouraging signs last year, right? So we saw a bump last year with SEA Racer, but still very, very early days. And I think performance have been choppy, but hopefully going forward, that will be another option for our companies.
Great. We got time for one or two more questions.
Hi, thanks so much for sharing. I just wanted to know, metrics and all that for e-commerce, common business models like SaaS, is always published like in the European and the US scenes. Why don't VCs within the Southeast Asian space also kind of let us know what are the metrics to expect? Because you're also talking about that. Is it because of a function of not enough VCs within this space, or I don't know, what are your thoughts on this?
You mean metrics in terms of valuation metrics? Or?
Yeah, like it's common for VCs overseas to kind of publish like this in our portfolio. This is the CAC to LTV ratio for the ones that we invest in. This is the growth rate, the amount, the team size, blah 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 blah. So things like that. Do you think that in the future, the Southeast Asia will also have their own matrix? Because I understand the valuation multiples will also be different. So is Southeast Asia gonna just replicate the metrics in the US, or are VCs gonna kind of publish their own in the future?
Yeah, I think if you are a VC in the space, you definitely sort of already have a very, very good sense of the valuation multiples, the unit economics profile, right, of companies in Southeast Asia versus US versus China, even different types of e-commerce companies in Southeast Asia, right, because I think most VCs who look at e-commerce in Southeast Asia have probably met, I would say, 70-80% of the e-commerce companies in Southeast Asia. So yes, internally, we already have a very, very good view. I guess as e-commerce entrepreneurs, you should have a pretty good sense as well. If not, let's have a chat after this.
So I think I'll split that question into two. I would say one is, do we know what metrics, what the metrics are? We attempt to sort of collect some data around those metrics. So we do have an internal view on what the metrics should be that are driven by sort of broadly what the market can absorb in terms of GDP per capita. And secondly, what is the next round of funding likely to look like? But in terms of making that public across different companies and trends, I think that's more a very specific sort of question for the VC. A lot of VCs in the US publish data, a lot of VCs don't. So it really depends. It depends on the culture and the mindset of that institution to publish data. But having said that, there are metrics that exist, and you should sort of feel free to reach out, and you can happy to have a chat on those.
Great. Any other questions? We can do one more. Anybody? Going once, twice. All right, well, let's give a big round of applause to Jane, Jonathan, and Chirayu. Thank you so much for coming and sharing your time here at Startup, Brian.